Bitcoin's starting to get really bullish, really frothy. Arthur Hayes is talking about a $750,000 Bitcoin that we will get into. Obviously, the Bitcoin price is up today. Is this your last chance to be able to stack? Some people are calling for some exponential gains very shortly here. Obviously, Bitcoin Twitter is starting to get a little bit frothy. The price is starting to heat up anyway. The price right now is 35,665 sats per US dollar, 28,004. The block height, 815,898. Let us know what block height you are watching this at 5:45 a.m. November 9 local time. Blocks to the next halving, estimated April 24. So it has come back a little bit from that April 25. We saw that happen the day it happened. Make sure you do hit subscribe, giving you news with the fast facts. If I click on this, it's going to bring up an ad for sure. Such a pain when it does that. So Bitcoin could surge beyond 750,000, Arthur Hayes says. It's weird that a pop-up even came up. Anyway, Arthur Hayes predicts a potential surge in Bitcoin's value, possibly reaching between 750,000 to 1 million by 2026. Absolutely massive there. So the former BitMEX CEO, Arthur Hayes, has made a bullish prediction about Bitcoin's potential price. According to Hayes, Bitcoin could hit a value between 750K to 1 million by 2026. So not that far away, really. Imagine that. Bitcoin today is at $30,000 or $35,000 to be closer to the target. We can bring it up and be more precise. 35,616 at this moment. And we're talking about 750,000 to a million by 2026. Get ready, strap on. It is going to be wild and fast. It is. We've got a lot to cover today, so we'll get into it. We'll keep going and I'll lay out the case while you may not expect what is coming next or what could potentially play out over the next coming weeks and months. So figure that outpaces most current forecasts. Key reasons. First, he anticipates a financial crisis that could see rates drop into zero. Somebody else backs this up as well, Luke Groman. We're going to jump into that in a second. Or a scenario where rates increase but not as swiftly as government spending rates. 70,000 by the end of 2024, driven in part by the crypto halving event. Bitcoin could be valued at that. He also foresees the launch of multiple ETFs by major asset managers in the US, Europe, and possibly Hong Kong. Obviously, we jumped in on Monday a little bit into what Taiwan is doing or potentially doing. It's the game theory is really heating up, ladies and gentlemen. That's why we can see those huge, massive price rallies, and you don't expect them. It's we're going to have $10,000, $20,000 days, in my opinion, obviously not financial advice. Hayes explains it's when the real bull market starts. We can have it go the opposite way we want it to as well. Be prepared. Anyway, contrary to the popular belief that China has completely banned cryptocurrency, Hayes suggests that the reality is more nuanced. Citizens still own Bitcoin. The Chinese government's main concern, Hayes argues, is to maintain social stability. This concern was exacerbated by the potential for local disturbances due to mass speculation in volatile assets like crypto. Also, they don't want their dollars leaving their shores. Furthermore, the environmental impact of Bitcoin mining and its significant electricity consumption also played a role in China's stringent measures. Pretty funny. They obviously use a lot of energy there. It is what it is, and we are seeing now how green Bitcoin mining has gone. It's one of the greenest industries out there. We've covered that multiple times. And how it allows green renewable energies to be able to become net positive a lot earlier so they can build out capacity and it's not an extra tax on the citizens. Hayes has stressed the unique position of Hong Kong, which may serve as a pivotal player in the crypto space. Now, we have a video that makes absolutely no sense. If anyone can explain it, I'd love you to. What is all this about? 47 seconds. Sorry you need to put up with it. I came across it, so I thought I may as well share.
My government's priority is to make the difficult but necessary long-term decisions to change this country for the better. My minister's focus is on increasing economic growth and safeguarding the health and security of the British people for generations to come. My government will continue to take action to bring down inflation, to ease the cost of living for families, and help businesses fund new jobs and investments.
Isn't it bizarre that we're literally looking at a king? Like, does anyone pay any respect to the king, what they have to say? Does anybody care? Serious question I really am asking genuinely. And if anyone can explain why the king's even involved with any of this. King Charles, it's interesting. Obviously, he hasn't written this himself. There's no passion there. And it's weird, in my opinion, super weird.
My ministers will support the Bank of England to return inflation to target by taking responsible decisions on spending and borrowing.
Yeah, I doubt it. Taking responsible decisions on spending and borrowing. When does the government do that, even on the King Charles decree? Anyway, let us know. And some more bullish news. If you are there in the chat, I cannot see it this morning. So if you can leave us a thumbs up, would be greatly appreciated. If you're here for the first time, hit subscribe. If we vibe, you will get the news with the fast facts. So let's jump in to why we are still looking so bullish. One of the most reliable on-chain Bitcoin indicators just flashed bullish according to the Glassnode founders. And so Glassnode co-founders Jan and Yan tell their followers that Bitcoin's market demand is outpacing its supply. Additionally, the Bitcoin network recently saw 700,000 new addresses created in just one day. That is massive. We've got more bullish news to cover, and we've got about 6 things, so we'll race through it. The analyst said, is one of the top indicators for future price movements. Bitcoin's market demand has outpaced its supply, a clear sign of robust positive momentum. We will get into if you are too late now to be able to stack. If you got to one during the bear market, well done. That opportunity is very quickly slipping away for many people to get to one full Bitcoin. If it was within their capacity, very soon most people are going to be priced out if you haven't been already. Unfortunately, hope you did your best truly. Did last for a very long time. If you're new to the space, study Bitcoin as quick as you can. Just on that, before we get into Price of Tomorrow, it's a really good book. And then Bitcoin Evangelism is an amazing book if you haven't read it yet. Details below. I'll make sure that's in the description. Otherwise, just go on Amazon and get those books, Kindle, Audible, whatever way it is to get as much Bitcoin information in as possible. Do that. Anyway, that would be do it or don't do it. You do you, I'll do me, as they say. So in just one day, a whopping 700,000 new Bitcoin addresses joined the network. This expansion is considered one of the most reliable indicators for price predictions. The fewer Bitcoin coins currently in circulation, buyers might need to increase their bids to have their orders executed promptly. In a further analysis in a blog post, co-founders say that with Bitcoin moving so fast, buyers will likely be forced to enter the market without waiting for dips. Now, this part I thought was important, possibly driving the price of Bitcoin up. Because there are fewer Bitcoin available right now, purchasers may have to raise their bids to get their orders filled fast. This could unwittingly boost the Bitcoin price above 40,000 soon. That does not mean that it's not going to come back down at all. It will go up, down, and sideways. But the corrections, if they happen, are more likely going to start to move really quickly. So act accordingly. Me, waiting for the red days to stack, and I do it for fun because the red days are good and we're not going to see as many, I don't think. Got a really cool chart to show you shortly. So hard and fast, Bitcoin price explosion to new high, about to catch everyone off guard. So the top trader, another person, blunts on X. Bitcoin may be in the early stages of a strong impulse that could take Bitcoin near the 60,000 level in a matter of weeks. So we've got one person saying $70,000 by the end of the year, potentially 60,000 in a matter of weeks, potentially. Somebody else is talking about 40,000 in that article, the Glassnode founders. Everything is pushing bullish. As they say, the trend is your friend, but also be fearful when others are greedy and greedy when others are fearful. We've gone through that fearful stage. That's out of the way. You can see the hopium in these articles, the buzz that is going on. Be aware of it because the buzz is real. And after Green Day, and we'll jump into the chart shortly just to have a look at it. Basically, when we get so many Green Days in a row, well, usually you only get 7 before it corrects, but when we're trending so well in the right direction and we are at the right stage of the market to start getting very excited. If you have got your bag, if you haven't got your bag, maybe time may be slipping away for you. So please just act accordingly, stack as hard and fast as you've studied and you're comfortable with. Obviously, Amber below is a Bitcoin only exchange, Australia, US. If you want to buy on a Bitcoin only exchange built by Bitcoiners for Bitcoiners. Blunt's practitioner Elliott wave theory, which attempts to forecast price movements based on crowd psychology that tends to manifest in waves. Sort of what we're talking about there. The trend is your friend. And sometimes you want to follow the masses, but be aware and be paranoid as well. Wholeheartedly believe Bitcoin is probably in a macro wave 3 now. Many are unprepared for how hard and fast this will run with minimal pullbacks relative to what they were expecting. Based on the pullbacks we had during the earlier parts of this year. Now, the person saying those pullbacks are going to be a smaller. Those multi-month 30% dips are gone. I think we'll get 20% dips along the way, but they'll happen to recover much faster moving forward. If we're at $100,000 and we get a 20% dip, that's a $20,000 candle in one day, in the wrong direction, but it can also happen in the right direction. So be aware, this is coming. It is going to be very volatile. Have a plan, stick to your plan, whatever that is for you. Maybe it's stack and chill, maybe it's ladder out, ladder in, whatever it is, you do you, but definitely have a plan because it's about to get hectic. Based on his chart, Blunt's appears to suggest that Bitcoin will reach new highs in mid to late 2024 with the fifth wave of the impulse putting Bitcoin through the $76,000 level. So you see that on that chart there as well. 1, 2, 3, 4, and then 5, $76,000, correcting back, hitting nearly 60,000, coming back to, I don't know, say that's $54,000 before heading up to 76. Take that with a grain of salt. The price will be what it'll be at the end of the day, but make the most of it. They're going to print the money as another bloody good reason why this is number go up technology, because whether they print the money this year, next year, the year after, whenever they print it, they are forced to print it mathematically. All fiat is going to zero, and this is an amazing take out of the What Bitcoin Did podcast by Peter McCormack with Luke Groman. So investor Luke Groman says US government will be forced into QE to avert crisis. Macro investor Luke says US government will soon be forced to print more money to address its rising debt and obligations. Says that with the combination of diminishing productivity and rising costs, the US will face a simple choice between printing more money or defaulting on its debt. People say they're just going to have to cut entitlements. It's not going to happen. It's not going to happen, in my opinion. I'm doing my best to recreate this for you. So then what's left? Print the money. Do the QE. Slash defense. No, they're not slashing defense. All that's left is printing money. They're not going to cut the entitlements. They're going to print the money. And they're going to print the money with oil at $90 or 84 or whatever it is, and they're going to print the money with Bitcoin at 35,000. They're going to print the money. These are Luke's words. These are fantastic words. I'd suggest everyone read this article just for this excerpt and check out the video that Luke did with Peter as well. So carrying on. And people say they wouldn't do that because that means they're going to have to do yield curve control, and that means you're going to have significant inflation. And the US inflation is going to look like Argentina. Ouch. It's like, yeah, that's going to happen because there's only two things you can cut here in the US, entitlements or interest. That's it. You can try to cut defense, but good luck being the guy who raises his hand right now and say, let's give Israel and Ukraine a pat in the ass and say, hey, go get them, guys, and leave. Groman recently said that relentless QE and a potential pivot from the Federal Reserve, aka the Fed. Obviously, we covered what's happening with the Fed with Bitcoin Magazine the other day. So quick reminder, do hit subscribe. If we vibe, we will keep you updated with the fast facts. So the Fed will create an environment where assets such as gold, oil, and Bitcoin can thrive. And we are seeing this game theory play out, obviously, with BlackRock. Dr. Jeff Ross is pretty funny. My favorite page on the stlouis.org, the Fred site, is buying eggs with Bitcoin. Since they started keeping track in January 2015 through September 23, the price of a dozen eggs and US dollar down negative 1.9%. From $2.11 to $2.07. So eggs have gotten cheaper. But in Bitcoin, they're down 99.2% from 925,406 Satoshis to 7,850 sats. Conclusion, life gets more expensive the longer you hold US dollars, while life gets cheaper the longer you hold Bitcoin. See for yourself. A look at currency related price volatility, and if we come back here to average price, eggs, grade A, large, cost per dozen, and US city average / the Coinbase of Bitcoin. Wow, that's pretty funny that they even cared that early. I guess they could see what it is looking to do. Tour de Mista, this is good and something to be aware of as we go into the bull market. It gets really frothy. You want to know that if it's not Bitcoin, most likely, mathematically, it's a scam. If you want to play and be a degen, go ahead, but just be aware that none of them have any value, in my opinion, or they're pre-mined and large investors hold most of the supply. I guess with projects like Solana, I think 76 of the supply is held by the initial investors. Maybe it's a little bit more than that, but be aware those things do happen. They pre-mine. That did not happen with Bitcoin. So it's not a fair playing field. Every time a swindler comes along, we add another blueprint to our library. The Bitcoin world is like an AI training to better discern ally from attacker. Next step is to build tech practices and institutions that make the ecosystem more immune from these fraud attacks. I'm in on crypto because I want to make the biggest global impact for good, and we stole what, 8-point-something billion dollars. It's absolutely can't make that any bigger. It's a shame. Be aware. Everyone bought into his hype and stuff. I hope there's no one else there. Queensland HODL, this was good. Tell me, what happens to the Australian bond markets when Japan is a forced seller and the RBA isn't buying? Oh, we've got a video actually to get through very shortly, but you can see here, Japan, Australia, their third largest forex bag. So we'll see what happens there. Robin, a very calm year for Bitcoin. I guess something big is Bruno. I did retweet this chart. So join us on Twitter at SeanClark911 and you'll see it there. It's very, very low compared to other years. So have a look. Well done, Robin, for putting that out. Now, Squawk Box. We cannot have a Fed that's reacting to yesterday's data all the time. Their tools operate with a lag. They need to take a strategic view and they need to stop being a volatility enhancers, says LRM. This unusual volatility in the bond market is not good for the economy. Now, this is pretty full-on, pretty scathing, really.
We cannot have a Fed that is reacting to yesterday's data all the time. Their tools operate with a lag. They need to take a more strategic view, and they need to stop being volatility enhancers. You know, this unusual volatility in the bond market is not good for the economy. It can break something, and it undermines the standing of the U.S. in global financial markets.
Isn't flexibility a good thing? The idea of saying, we're going to wait and see. I think everybody kind of...
That's a pretty good info graphic there. So 75, up 75, up 75, up 75, up 75, up 50, up 25, 25, 25, pause, up 25, pause, pause. Do we get another pause? It is really looking like it, and hopefully we do. Australia, they did hike by another 25 basis points earlier this week. Nice email to see. Thanks, RBA. We are seeing 1.4 trillion in the cryptocurrency market cap. The only reason I bring this up is we want it to keep climbing, get above the $3 trillion that we got in the last cycle. And it's actually funny. The higher the price gets, the higher the price gets, obviously until it no longer gets any higher. And I know that's walking around the subject there, but that's how it goes. FOMO is real. People jump in, the price goes up, and then people have a fear of missing out. So then they jump in, and then more people jump in. Then mainstream media is starting to talk about a little bit more, but it's really going to ramp up. Obviously, BlackRock, along with everyone else, is really going to start pushing this narrative out there. Just the amount of Bitcoin content that's going to be on mainstream news, once just the average person starts talking about it, then we'll go into that bubble part, and it'll do what it'll do. History doesn't always repeat. Often it rhymes. Be prepared. Volatility ahead. And, and I want to show you this. So in the last year, it's been volatile. Like, we have gone up, down, and sideways. And sometimes all of them in the same day. But in the last year, we're up 90%. In the last 30 days, 29.2%. So pretty much 30%. The last 14 days, so 2 weeks, 2.7. 7 days, 3%. So pretty much sideways for the last 2 weeks. Last 24 hours, nearly 1%. And the last 1 hour, up 0.5%. But we are doing really well to hold above 35,000. And you can see here in the last 24 hours, a low of 35,187 and a high of 35,871. Says we're sitting at 38,616, but I haven't refreshed it. More so because I just wanted to look down the bottom here. What are we looking at? 35,728. So it is climbing more and more, up only 0.1% in the last 24 hours. But look at those green candles on the chart. This one up here, if we see $1,000 candles, we'll start to see tens of thousands of dollar candles. This is just to get a real quick overview of the entire market there for everyone. Lots of green in the market. Most of it's a psyop there. The only one you need to pay attention to, in my opinion, is the one on the left. You do you. It's, or have proper risk mitigation strategies if you are going to be a degen. Stablecoins, not a safe store of value. This is written, the paper that was assessed was by the Bank of International Settlements. This is starting to really get crazy that they said a couple of things that I think you'll find interesting. Obviously, stablecoins are not Bitcoin, but stablecoins widely adopted, and sometimes more so than Bitcoin. But it's pretty interesting that the Bank of International Settlements is they're aware that they're losing control, and they want to control the world. So they're the king and queen makers, the BIS and these agencies. So we'll get into it. Not one of the stablecoins assessed in this paper has been able to maintain their closing prices in parity with their peg, wrote the Bank for International Settlements. So in outlining its reasons, BIS explained January 2019, September 23, fiat-backed stablecoins maintain their peg ratio only 94% of the time. And the reason I bring this up is because some people watching are going to go out on the risk curve, and that's fine. You do you. You're allowed to. But be aware if you are moving into stablecoins that this could happen. And it gets a little bit worse. Less than the 100% often promised in projects' white papers. Meanwhile, the peg ratio for crypto-backed and commodity-backed stablecoins was far less, at 77 and 50% respectively. Only 7 fiat-backed stablecoins have been able to keep their deviations from the peg below 1% for more than 97% of their lifespan. And we have seen some huge depeggings, and it's catastrophic in the market, absolutely. Terra Luna was a pretty big one. Both Tether and USD Coin have met this TED standard. However, all other fiat-backed stablecoins temporarily lost their pegs more frequently and with much larger deviations, the financial institution continued. When I said king and queen maker, are they looking at both Tether and USDC? Interesting. The BIS also warns that some stablecoin issuers do not solicit independent certified public accountants to examine their reserves. Of course, we see that in their proof of reserves. I think Tether put one out as this dodgy little Excel spreadsheet. So they're still holding in, you know, they've gone through all the FUD and stuff. So I don't need to add to that conversation. But all I'd say is be careful. You know, I probably agree a little bit with the BIS here on this one. And anyway, and for those who do, the reserve reports often do not follow a common report and stand. How interesting. So due to this lack of clarity, it is unclear whether these stablecoins would be able to convert users' stablecoins at par on demand and what the financial stability implications would be of a potential run, the entity stated. Yeah, what happens? But what happens everywhere else when there's a bank run? And I guess people are starting to realize they can just print an endless amount of money. The FDIC insurance up to $250,000 was made a joke of because they agreed to go above and beyond. So now people are expecting that until they're like, no, we're no longer doing that at all. So make sure you act accordingly. Not your keys, not your coins, or not your keys, not your cheese, as they say. So if you need help storing it, you can reach out to the Bitcoin advisor. That's a free consultation for the first one. If you need help walking through that process. If you want to get a sick hat, anyway, join FOMO21. Their link's below. That one's not an affiliate link. Just really cool merch there. Love their shirts. Bitcoin is hope. We are here for a good time and for a long time, I hope, because we are just getting started and you should be looking 5-10 years out. It's very exciting what happens day to day. Absolutely love it. Absolutely love it. And that's why we show up and we're here and we have the banter. Drop us a comment, hit the like button. That would help out a lot if you did get value. But it's fun. It's so fun. There's so much going on in the space and you need to be able to connect the dots, join and figure out what the propaganda is saying because they slowly release these things. Even the World Economic Forum put out positive about data centers, but they had a Bitcoin mining company out there. Now we've got the Bank for International Settlements talking about stablecoins and stuff. The propaganda, it needs to be slow to be able to seed people, but there is a lot going on. And maybe in one video, we'll sort of link it all up. Anyway, we'll see you on the next video. Have a very beautiful day. Be blessed. Peace.